Hey, in case you're wondering why this face is popping up in your timeline, this is Yaska on chart. And I don't think I've ever shown my face before. Okay, wait, I have on my Instagram, but I don't think I've ever shown my face on YouTube. Yes, I have been away for the last 2 or 3 years, I think. The reason why I have been away is because I was building a business. Built a near six-figure agency. Last year was our first year, and we did near six figures. Building that agency has been a dream, has been everything that I would have ever wished for. We have a team of 6 full-time employees, healthcare fully covered, bonuses, salaries, commissions. I've been solely focused on that for the last 2 years. Do you know what to do with this channel? I changed the channel name from Yaska on Chat to my name, which is Nana. And at some point, I think I even deleted the channel because I thought I would never have anything to do with this channel anymore. I'm just saying this for clarity. I still don't know what I'm going to do with this. I'll post a couple of videos here and there, but going forward, my videos would be trading related and my personal life related, my business related, I really don't know what I'm going to do with this. But today, I'm going to talk about how building my business has helped me with my trading. Now, I'm talking a little bit more about the agency. Last year, we did near six figures. Our profit margin was near around 35%. This year, we will do around the same revenue, which if you think about it, it doesn't seem impressive because business is meant to grow from year to year. But this year, we'll do either around the same revenue or slightly less. But then the gross margins on this year is 89%. And that's because we took 5 months of last year to figure out how to run the company much more efficiently, much more shrewd with how we manage our teams, our resources. Gearing that into what I'm about to talk about today is being able to understand why things work the way they work, certain numbers to look out for, and how I have basically applied this to my trading. And looking back at my old self, I laugh at how I thought I should be managing my capital. And that's the thing, like most of us don't look at trading like a business. We look at like this thing where you come and flip money, buy a Lamborghini. I still don't have a Lamborghini yet, anyways. Come and flip money, buy a Lamborghini, and live life. But it's an actual business that you need to understand every single thing. The analytical side of what it is we do, we track every single thing: customer acquisition cost, cost per click, cost per lead, cost per appointment, cost per close, margins on every single thing and every single service that we provide, how we can optimize on it, churn rates. You need to understand your business in and out to be able to make it run efficiently. And if not, you're just as good as a trader that has one good lucky run, and then things that lucky run will last forever. So let's just get right into it. So this are the things that we track. Now, purposefully, I zoomed out on this thing because I'm not really ready or willing to share my business numbers and what each single metric is, but this is how much we track. This here is our growth on a day-to-day, month-to-month basis of how much revenue we're making, how we're losing winning clients, what happens when we run a campaign, where the gain is coming up from, down to all the clients that have ever paid us and when they have paid us and where they came from paying us. Like, you have to be able to understand each and every one of these things. This here tracks the weekly metrics of the business, every single thing. These numbers here, how much payments are coming in, going out, expenses made, so on and so forth, tracking down to clients that we're losing, the ones that we lost, how long they stayed with us before we lost them. You have to understand it. You have to be obsessed about it. Now, taking that into consideration, pushing that into my trading, I decided to do the same thing. So I think it was March this year, I decided to say, you know what, I'm at a point right now that I can step away from the business. To give a bit of context, for the last 2 months, I probably worked 5 hours in the business, 5 full hours in 2 months. And that's because I have an efficient team that took me a year and 4 months to get them to the point where they wouldn't need me anymore. And we could go from sourcing a lead, turning the lead to a client, onboarding the client, delivering for the client, and I still wouldn't have to be involved in any single aspect of it. But that again comes down to understanding the metrics of the business, understanding every single moving part of the business. So March, I decided to look back into trading. I said, you know what, hey, I'm going to go back into this. I genuinely wasn't trading for 2 years. I wasn't even looking at the charts in any shape or form. I was just solely focused on the agency. Now, I decided to backtest. Well, the question is, does backtesting work? Yes and no. Now, the reason why I'm saying yes and no is because it does work if you backtest as if you were live trading. Now, what I mean by that is you account for commissions, you account for slippages, you account for every single thing. It will never be perfect. You're never going to get like 100% perfect backtesting result flipped on the other side. But if your backtesting result says you should make 100% a year or 200% a year, and in real time you're making 70% a year or 140 or 150% a year, that's good enough, right? It doesn't need to be perfect. Nothing ever goes according to plan. Now, the other side that people say that doesn't work in backtesting is, oh, your emotions are not going to be same. Now, that's why you have to backtest as realistic as possible, right? You can backtest saying, well, I would have held this trade for 100 R. The truth of it is, are you really going to do that? I wouldn't. So there's no point in me looking at results and tracking that, right? At most with my trading, I would look to scale out heavily at anywhere from 7 to 8 to 10 hour at most. I'm not holding anything past 10 hour because that's good enough. You're risking one and getting any from 7 plus. I'm starting to exit, right? I'm not going to lie to myself. And yes, some of those trades will run to 20, 30, 40. Hindsight is always the best, but hey, what can we do? So anyways, these are the results I have from my back testing, and if anyone is interested, I could always share this. So these are the results I have from my back testing. Back tested 2023, 2024, 2025. Well, I didn't really back 2025 is mostly trading and back testing. So these are the results. So I have a very clear expectation as to what to expect from this. And well, again, some of you may look at this and go, well, it's back testing. This is never going to happen in real time. I decided to test it out. So came back March, mid-April, I decided to deposit a little money into an account and just see what would happen. Traded the account at anywhere from 3 to 6% risk, depending on the quality of the setup. So this here shows my week to week on my backtesting results. This here shows month to month. And this year is 2025. Just June may actually end up being a losing month. I don't know, but June has been a bit rough. Now, I decided to deposit, I think it was $300. Took the $300 to peak of it was like 2,000 something dollars. Ended May at around $1,800. And this is it. Great. So this is it here. And as you can see, this is just for April and May. Now, I know quickly your eyes may just pan to the right side of the screen and you go, hey, this is it. He lost all of it in one trade. Well, no, I didn't. This is actually a withdrawal, as you can see here. That's withdrawing 1,048 and then withdrawing 696. If you look at the finished trades, this is it. Everything here, that's it. Account was sitting at like 1,888. Commissions paid were ridiculous, like almost $500 in commissions. And that's what happens when you're short-term trading. You're going to have those moments. If we head over to the calendar, this is what it looked like. April was very slow and I didn't try to do any flip. I just stuck to the plan, traded 3 to 6% risk. And as you can see, April was nothing impressive. And then we just go into May and opportunities were just dashing out. Had like $1,000 day, had a $600 day. This is all the trades here broken down. And so on and so forth. So, withdrew the money. What did I even do with the money that I withdrew? I got solar from my parents. So I installed a solar inverter at my parents' house. And I'm in Nigeria, by the way, in case you don't know. So we have a lot of light power issues. So I made sure I sorted that out. Not that I needed the trading money to do that, but one thing I see a lot of traders do is that they have this tracking sheet. They're like, I'm going to compound this for 10 years and I'll be richer than Jeff Bezos and Elon Musk. Don't do it. It's not realistic. Talking about, again, backtesting or drawing up a realistic plan is that you need to pay yourself. No matter how little it is, you need to pay yourself something, no matter how fucking little it is. Just pay yourself something. Yes, it's going to affect your compounding, and instead of being a billionaire in a year, it's going to take you 3 years. And everybody has that shit where you track everything, and yeah, you should have a gold Lamborghini. But don't do it. Don't do it. Pay yourself something. It keeps you grounded. It was one of the things that helped me the most in my business is that I wasn't trying to flip it to the moon. Every single month, I paid myself a salary. I started paying myself a salary that was less than what I was used to. And the business is going to a point that I live a very comfortable life. I stay in a big house. Let's just leave that part out of it. But just pay yourself something. To give, again, a bit of context. I'm withdrawing money from the account to buy Black Myth Wukong. If anybody knows... that it's a game that came out last year. I haven't had the time to play it. And I was like, hey, I made some profits on Friday. I'm going to withdraw the money and buy Black Myth Wukong. I don't need to. I've got the money in my bank account to pay for it. I can pay for it out of pocket. But it's just something that you realize, what I'm doing is actually real and it can sort out my real life situations. That way you stay grounded and you don't have like this unrealistic plans of like holding a 100-hour trade. If you realize you're good with 7, you're good with 10. My plan is to grow my current account, which maybe at some point I'll start a series where I share that journey. So grow my current account and just see where I take it to. I really don't have a goal in mind. I trade at anywhere from a 2 to 3% risk. And I just take every setup that comes that is valid, and then we keep it moving. Going to the trade of Friday, or rather what happened this week. Now, on Monday, I took 2 losses. Tuesday, 3 losses. Wednesday, 1 loss, 1 break even. That break even was floating at 5.6 hour. Then I had another break even that same Wednesday. That was FOMC. Yes, was floating at like 4 hour. Price came back. You know, the FOMC spiked. I was selling. Thursday, 1 loss, 1 break even. Friday, 2 wins. Now, if you calculate everything I've said, that's 2 losses, 3 losses, that makes it 5. 1 loss, 1 loss, that makes it 7 losses, 2 break evens. So I was down 7 hours for the week. And I was like, hey, you know what? It may just be a losing week. This is something, again, that people try to avoid, because you look at Twitter and you see someone making money, you're like, there must be something I'm doing wrong. There must be a risk that I'm not placing right. That's a lie. It's just part of your edge. Part of your edge is losing money. But being able to controllably lose that money and not just going on a spiral, right? So Friday got 2 wins, and I'll break down the charts as to what I saw on Friday, why I got the 2 wins. And I'll say this, don't have anything right now to sell, to share, course, or whatever the case is. So if you have any questions, just drop them in the YouTube comment section, Instagram. I'll drop my personal Instagram and the other one, and you can just send a DM on there. With that being said, yeah, let's get into the charts. What was my thought process going into Friday? Now, the market we had this big range day on Friday. This was last week Friday, and the market stuck within that range on Monday. I really tried to sell this on Monday, and it didn't go according to plan, sadly. So this was the range on Friday. Monday stuck within that range. I wanted to sell from here, but the market didn't push into my ideal level, and as you can see, price broke out. I knew that this was going to happen, because this is, again, talking about my first video, which was like 5 years ago. I still trade the same way, practically, not really the same, but yeah, this is an inside day, and whenever we have an inside day, price is about to aggressively break out of that inside day. So this was an inside day, and you can see this big aggression out of that zone. Now, missed out on that move, so let's just skip to Friday. So I'm seeing all of this happen. So on Friday, the breakout that we had on Tuesday, had a consolidation, price expanded, consolidated again, price expanded. I had my eyes marked out on this candle here. Now, I'm not going to give this candle any name, because I realize there's so many names right now. This candle, breaker block, this, like, everyone is coining names, and I don't even know what most of them means. So let's just call it an important candle. For me, the name you call a candle or a zone doesn't fucking matter. It doesn't matter, honestly. As long as you understand what you need to do when price gets to that level. And if it's part of your plan, fine. And if it works, fine. If it doesn't work, fine. So I had this level marked out. I was mostly focused on selling on Friday. But then I told myself, if I get a buy opportunity where I can buy into that level, I would buy as well. Now, I trade London session, trade New York session. That's about it. Then I get done for the day. So let's roll the charts leading towards the London session. Now, the first thing I had noticed was we had this double top here. I wanted to see price take out this level. Great. I want to see price take out this level. So we're just going to push this, and I'm going to push it till we get to the 7 a.m. candle, because that's when I start preparing for London. Okay, great. So we're just going to take this. Okay, so yeah, we just got to 7 a.m. Now, this is when I woke up and I looked at the charts, and the first thing I did was to draw out a zone. So in as much as I have this whole context of this level, that level, whatever the case is, I realized personally I trade better in ranges. So what I mean by ranges is that I identify where should be the top, where should be the bottom, and then I use that as a premium or as a discount, meaning that if price is towards the bottom of the zone, I want to be buying, and if price is towards the top of the zone, I want to be selling. That's my thought process. Now, this is the zone that I had marked out, and I'll explain what this zone is. So there are different days I use different zones, different areas, but this day I was using the Asian session high and Asian session low, which opens at midnight, my time anyways. I don't know what that would be for your time, but you can figure it out. You can simply just have an indicator. I like drawing things out because it calms me down as opposed to waking up and just seeing indicators on the screen. Now, what I was waiting for at 7 a.m. was for price to either take out this low. Now, remember, I want to be selling when price gets here, right? When price hits this zone, this is where I want to sell from. And one of two things would happen. This is my thought process. Either price pushes higher into that zone and I just sell and probably get done for the day, or price it gives me bullish signals for me to buy into that zone. But for me to buy into that zone, I need for price to hit the range low. That's why I said I trade in zones. So we had this happen here. All right, cool. As soon as price touches that low, I'm like, great, we're in. Now I need to start looking for buys. So what I did was I scaled down to the 5 minutes, and I mostly just trade within the 5 to 15 minutes. I really don't do anything much more complex than that. So we scaled to this. Now what I'm waiting for is for bullish signals. So we've had a break of structure here. This here. So price breaks that structure. I had a level out here, and I said if price returns back here, this is where I want to buy from. And we'll see what happens. Great. But then that didn't happen. We broke higher. So we broke higher again. And I said, okay, great. This is the new level where I want to buy from. So this is where I marked up. And I said, price returns back here. I want to buy from here. I want to buy from here. We had a fair value gap as well, which you can see at this level, which I'll mark out. Sorry, that's wrong. So I added an extra 1 pip. I always do this to all my trades. I really can't be bothered about being perfect about everything. These are some things that have really changed about my trading. I marked this out to the range high. It was giving me 4.5 pips. I adjusted it. I really didn't care about getting out at, sorry, it gave me 5.07 pips. I really didn't care about perfect entry, perfect exit. So I just wanted to get 4.5. If we can catch majority of the move. But what I mean by that is if price is saying from my analysis, I should get 6R, right? And I can catch 4 of the move. I'm happy. Like I'm not trying to kill myself for the remaining 2R. So this happens and we have this here. Where is it? Okay, great. So price comes, taps me in. Fair value gap has been filled. As soon as price had pushed above this level, I broke even this here. So as soon as it pushed above that level, I broke even the trade, right? So I moved my stops to break even and I just waited for price to play out. And where is it? I'm looking for this. Okay, great. We got our TP quite soon. Price stalled for a very long time. I scaled out here severally. So I scaled out here, because I've seen price do this and then just reverse. So I scaled out severally because I couldn't be bothered. And then we got that TP finally hit at this point. And now I waited. Oh, that's a mistake. I waited for the what's it called? For the New York session. Because again, this is the break time. So I'm waiting for past 1 p.m. my time, which is past 8 a.m. New York time. As soon as you get this, I start paying attention to the charts. Now I am waiting. We've hit this level. I didn't just go short from here because honestly, I don't know if that level is going to hold. So you can see I'm waiting for a lot of confirmations. Price taking out his zone. I'm waiting for the confirmation of that zone. Waiting for a break of structure in my direction. Waiting for fair value gaps in my direction. Asking myself where do I want to enter off of. Not trying to have the perfect stop loss and the perfect exit. I just want to be part of the move, and that's just it. So we hit this. I'm waiting for price to break lower, and we eventually get that very soon, which I'll show you the level that I used. I think we're getting there. All right, cool. Great. So as soon as we break this structure here, this one here. Great. So as soon as we break that structure here, I mark out this level. This is where I want to go short from. So this is a typical bearish block. So that's a bearish block. Fair value gap as well between here and here. I wanted to see price fill that up. So Again, added an extra 1 pip, so it was like 6.2, yeah, 6.2 pips. And what was I going for? The low of the range here. This is exactly what I was going for. And if we look at this here, we had a very good reason to exit, which was this level that we had drawn up earlier on. We had a very, very good reason to exit at this level. So with that being said, right, had my Libis on. Now, I didn't actually wait for 5R again. I was fine with getting out at 4.5. It just so happens that this range was 5R and ended up being 4.5. So some other days is going to be different. So I ended up getting out for 4.5. Use this level as a liquidity point where I would like to see price run to. And great. Well, I like to see price run to. So that was it. Price, as soon as price took out this swing low here, I broke even my trade. So broke even my trade at that point, and that's it. That was me done and out for the day. Price kept on pushing lower, but I really don't care. But that was me being done and out for the day. Now, you may Now, remember at the start of this video, I was down 7R for the week, caught 9R on Friday, 2 perfect trades. And from those 2 trades, I wasn't up 2R actually because commissions and everything. So I'm up like barely break even, barely above break even. I think I was up like 1.1R, and it happens. And I've had weeks where I've done 20R. It happens. It's part of the thing. And well, here's back to you. Here's just me being back on YouTube, and I don't know how I'm going to post videos, whether I'm going to do it consistently, but I know that I want to come back to posting videos. And again, it's going to be very random videos, could be trading, could be about business, but I just want to see where this goes, and I'll keep this up. All right, have a good weekend, everyone. Peace.